If you've been keeping up with the crypto headlines, you'll know that Ethereum insiders, including the Ethereum Foundation and Vitalik Buterin himself, have been selling large amounts of ETA. Many are naturally wondering whether these sales are contributing to Ethereum's underperformance. Today we're going to take a closer look at these sales and other key factors that could be holding Ethereum back. Whether you hold ETA in your portfolio or are considering picking some up, this is a video you need to watch. Stick with me as we explore what's been happening behind the scenes and what it all means for Ethereum's future. Let's start with the Ethereum Foundation. For those unfamiliar, the Ethereum Foundation is a non-profit organization based in Switzerland. It was created by Vitalik Buterin and other Ethereum founders in 2014 and is run by an executive board consisting of the executive vice member Patrick Steninger. The foundation essentially operates as a team of teams, with each team focusing on different aspects of Ethereum's development. While it's structured like an organization, the foundation describes itself as neither a tech company nor a typical nonprofit. Its primary purpose is to support the Ethereum ecosystem without controlling it in any way, preserving Ethereum's decentralized nature. This support is provided through the allocation of resources to critical projects that bring value to Ethereum's ecosystem, funding research, development, and education. The foundation's funding comes from its treasury, and according to Arkham Intelligence, the Ethereum Foundation currently holds a massive treasury of around $670 million, predominantly in ETH. Despite efforts to maintain decentralization, the Foundation is the most influential organization within Ethereum's ecosystem. This means that when it offloads any ETH, investors take notice. The Foundation has a history of timing the market incredibly well. For example, in May 2021, it sold around 35,000 ETH at an average price of around $3,500 per ETH. Shortly after, Ethereum's price took a major hit, falling by more than 50% at one point. Even more notably, in November 2021, the Foundation sold 20,000 ETH on the 17th of November, just after Ethereum hit its all-time high, a price that it has yet to reclaim. These sales have sparked concerns that they could signal the market has reached a local top, and many investors fear the same might happen again. More recently, the Ethereum Foundation has been selling smaller amounts of ETH, but these sales continue to raise concerns. For context, in January of this year, the Foundation sold over 600 ETH, worth around $1.6 million at the time. Throughout July, it offloaded another 350 ETH, valued around $1.1 million. That same month also saw the Foundation move a massive 92,000 ETH, worth approximately $290 million, from a wallet that had been dormant for 7 years. While it's unclear whether this entire amount was sold, the transfer definitely attracted attention. In September, the Ethereum Foundation sold another 450 ETH for $1 million. In total, the Foundation has sold around 240,000 ETH since January 2021. Just in 2024 alone, it's sold over 3,000 ETH worth roughly $9 million. These sales have had an undeniable impact on Ethereum's price, often followed by a dip. If we chart these sales alongside Ethereum's price movements, it's clear that after each sell, Ethereum's price tends to take a hit. It's important to note that not every Ethereum Foundation sale has been followed by a sharp price decline. For instance, back in December 2020, the Ethereum Foundation sold a significant amount of 100,000 ETH. Despite that, Ethereum's price surged by over 60% in the months that followed. Of course, we can't assume that history will repeat itself, but it's food for thought. However, the sales from the Ethereum Foundation are not the only concern. Vitalik Buterin, Ethereum's co-founder and one of its most visible figures, has also come under fire for his recent sales of ETA. Vitalik's involvement in Ethereum is crucial, so when he sells it raises questions and concerns. On the 9th of August, Vitalik transferred 3,000 ETH, worth around $8 million, to a multi-sig wallet. Less than a month later, on the 30th of August, he transferred another 800 ET to the same multi-sig wallet, which then began selling in stages. Over the following weeks, the wallet completed 5 transactions of 190 ETH, amounting to around $470,000 every 3 days. By the first few weeks of September, Vitalik had sold a total of 915 ETH, worth about $2.2 million. Understandably, this raised eyebrows, with some accusing Vitalik of manipulating the market by making large sales while being seen as a major influencer of Ethereum's price. Vitalik responded to the criticism by clarifying that these sales weren't for personal profit. Instead, the sales were for a charitable cause related to a biodefense group that he funds. He made it clear that the proceeds from the sale would be used for supporting various projects rather than for his own gain. He further emphasized that he hadn't sold any ETH for profit since 2018, and that he uses his ETH holdings to support Ethereum's ecosystem, not to invest in Layer 2 solutions or other tokens for speculative purposes. Vitalik also pointed out that by donating funds to specific projects, he could influence the Ethereum ecosystem more directly, and also avoid being seen as part of a plot to direct the Ethereum protocol toward benefiting certain tokens he might hold. In his words, he prefers to set an example that reassures the community of his clear stance on these issues. While the sales by Vitalik and the Ethereum Foundation have certainly attracted attention, it's worth noting that they're not the sole reason for Ethereum's underperformance. One major factor is the disappointing performance of spot Ethereum ETFs. When compared to Bitcoin ETFs, Ethereum ETFs have had a rough start. Since their debut in January, the spot Bitcoin ETFs have experienced cumulative net inflows of over $17 billion, making them the fastest adopted ETF products in history. In stark contrast, the spot Ethereum ETFs have had cumulative net outflows almost $600 million since they were launched in June. This weak reception has raised concerns, especially since Ethereum was expected to be a major player in attracting institutional interest. One possible reason for the underperformance of spot Ethereum ETFs is the fact that Ethereum is far more technical and less intuitive than Bitcoin. Bitcoin's appeal lies in its digital gold narrative, which is simple to understand. On the other hand, Ethereum's use cases and ecosystem are far more complex, making it harder to sell to more traditional investors. Furthermore, Ethereum's association with riskier assets, such as altcoins and Layer 2 solutions, adds an extra layer of uncertainty for institutional investors. Bitcoin, on the other hand, is seen as a more straightforward risk asset, and under current macroeconomic conditions, investors tend to shy away from assets they see as more volatile and complex. This has led to a situation where, while spot Bitcoin ETFs are thriving, Ethereum has not managed to capture the same level of institutional interest. The failure of spot Ethereum ETFs to attract significant inflows is a major concern for Ethereum term outlook, as it once hoped that institutional interest would play a significant role in driving demand for ETFs. However, it's important to note that not all of the outflows from Ethereum funds are due to spot ETFs. A large portion of the outflows can be attributed to Grayscale's Ethereum Trust, which has seen massive outflows since it converted into an ETF. This outflow has amounted to around $2.7 billion, which is significantly more than the outflows from spot Ethereum ETFs alone. While this has hurt the overall sentiment around Ethereum, it's worth considering that there are still large sums of money being invested into Ethereum in other forms. The underperformance of spot Ethereum ETFs, however, represents just one piece of the puzzle. Broader macroeconomic factors are also at play. With recession fears growing, investors are generally more risk-averse, and in times like these they often flock to safer, more stable assets like cash or government bonds. This shift away from risk assets means less attention is given to more speculative investments like Ethereum. In addition to recession concerns, there are worries about the broader tech sector, which has recently faced turbulence. For example, Nvidia, a company that has been one of the darlings of the tech sector, saw its market cap drop by $279 billion in early September, sparking concerns about a potential tech stock bubble. These fears have spilled over into the cryptocurrency market, with Ethereum feeling the effects. Ethereum is also facing challenges at a more technical level. Lower activity on the Layer 1 base chain has led to reduced network fees and, by extension, less demand for ETA. While this is a positive development for Layer 2 solutions, which are becoming more popular due to their ability to scale Ethereum's transaction throughput, it also poses a challenge to Ethereum's long-term viability. As more users shift to Layer 2 solutions, Ethereum's core network faces reduced transaction fees, which directly impacts the revenue generated from fees. In fact, Ethereum's fee revenue has recently dropped to its lowest levels in over 4 years, having collapsed by 99% in the last 6 months. This represents a troubling trend for Ethereum's financial sustainability, especially given the high costs of maintaining its infrastructure and the ongoing development of new features. This is why some Bitcoin maximalists like Fred Krueger have argued that Ethereum is in a death spiral. According to Krueger, the reduced fee revenue of only $73 million per year is far too low to justify $300 billion market cap. While it's true that Ethereum revenue has dropped significantly, it's worth remembering that the network's transition to Layer 2 solutions is still in its early stages, and this shift could eventually launch a new